Hi, I'm Michelle Gordon with the Gordon Group, Keller Williams Realty, and today I am here with Bill Cole, State Farm Insurance. Thank you, Bill, for being with us today.
Thank you for having me.
And we're going to talk a little bit about the importance of homeowners insurance. Homeowners insurance is not something that you take your friends to your house and say, come and look at my new policy, and bring out the paper and show it to everyone how great it is. But when you need it, and you're glad it's there. I am one person who personally has suffered from a fire, and the reason why I am here with State Farm today is because of the way that they supported me and my family when our house caught fire and we had nowhere to go. So today we're going to talk about possible first-time home buyers that are renting now and what they can do to prepare and get ready for homeowners insurance. Now, Bill, should renters have renters insurance?
Yeah, a big misconception with renters insurance is that people think that the apartment building that they're living in will cover their stuff if there's a loss. If their neighbor's place catches on fire and it does damage to their stuff, they have no coverage unless they have a renter's policy. The places that they're living in, a lot of apartment complexes now are requiring people to carry renters insurance. Anybody that we talk to that is renting, because you get a good discount also if you have auto insurance and renters insurance with the same company.
What's that called, a multi-policy?
Yeah, multi-policy or multi-line discount. And renters is really a way to cover your own personal property because over time people, with your furniture, your appliances, your clothing, if you take that all into consideration, it can be quite a bit of money if you had a loss.
Are all rental policies created equal?
No, there's a lot of comparisons when you look at cost, of course, is one, the discount that you would get for a multi-policy, your length of time with somebody, but coverages within a renter's policy, mainly it's your personal property, and that can be covered a couple of different ways. Actual cash value is one way of loss settlement. That is where we're paying an actual cash value minus depreciation on something that you would have lost, that had been stolen or burnt up in a fire. There's also replacement cost, which not all policies have replacement costs, but some renters policies do. That's where we're replacing exactly what you have, and we're either going to go out and find that replacement item for you, or we're going to reimburse you after you find that replacement item.
Okay, what if I have a renter's policy and then I get ready to buy a home and I still have 6 months left on my renter's policy? What happens then?
You know, the nice thing about it, some insurance companies will actually give you credit for the time that you've had the renter's policy because it's the same type of fire policy when you have a homeowner's. Also, anything you've paid towards that renter's policy, if you have to transfer it or cancel it or turn it into a homeowner's before the actual date of the policy, anything that's unearned premium would go towards that homeowner's policy, so that can help as well.
Now, if I'm going to go and seek out a new homeowner's policy, and I've never done this as renters, I've never had it other than car insurance, are they going to check my credit rating?
Credit is part of an overall insurance score. Most companies in the state of Michigan, credit is a component of it. It's not the major thing, and it is a soft hit on your credit. So it is not like you're going to get a vehicle loan or a mortgage loan where it's a hard hit. It's a soft hit where it's just part of a score.
Okay, so it's not going to ding my credit.
No.
That's what we're using. Soft hit, hard hit. So it's a soft hit, and it's not going to ding it. So when I'm comparing policies, you had mentioned before depreciation. There's things to look at when comparing policies. I want to look at not renters insurance, but homeowners insurance. How do I compare to make sure that they're apples to apples? Because when buyers bring policies to me on the same house, I can see a policy for $300 a year up to $900 a year. What am I looking at?